From the library of the New York Stock Exchange, at the corner of Wall and Broad Streets in New York City, you're inside the Ice House, our podcast from Intercontinental Exchange on markets, leadership, and vision in global business. The dream drivers that have made the NYSE an indispensable institution for global growth for more than 225 years. Each week, we feature stories of those who hatch plans, create jobs, and harness the engine of capitalism. Right here, right now, at the NYSE and at ICE's 12 exchanges and 7 clearinghouses around the world. Now here's your host, Josh King, Head of Communications at Intercontinental Exchange.
This morning, the New York Stock Exchange added a new name to our community of listed companies. In a recent episode you probably would have heard, we spoke to Jose Cobos about his new role as head of technology capital markets based out on the West Coast. We mentioned that there were a few companies that were going to come public, and when they did, we might get here into the Ice House. And today, we're bringing back Jose, who now qualifies as the first person ever to be a repeat guest on Inside the Ice House as our first official friend of the pod. We're going to bring back Jose with a company that he helped bring public, Zuora, on the New York Stock Exchange. We are in the fortunate position here at the NYSE to help bring tech companies into the public markets. We get excited every time a new company IPOs and rings the opening bell. It's the sound of new innovation coming to market, of entrepreneurship, and the chance for a company to grow, create jobs, and improve the world. After the break, we'll speak with Zuora to get an inside take on how their software platform is revolutionizing the subscription model and what it was like to experience an IPO for the first time. All that after this.
Inside the Ice House is presented this week by ICE Futures Europe and the ICE Brent Crude Oil Complex. Have you ever rolled up to the pump or heard a news report on rapid changes to the price of a barrel of oil and wondered why the price is different than yesterday? Most of the world's oil is priced relative to the ICE Brent complex, and ICE is where a large percentage of the world's crude oil derivatives are traded.
If you listened to the show last week, you heard Jose Cobos in his conversation with us inside the Ice House. He's the head of technology markets for the NYSE. He's back in the house, and he's brought our newest listed client, Tyler Sloat, CFO of Zuora, with him. There's an old adage that convenience is king. Nowhere is that more relevant than here in New York City, where we want access to people, places, and things as quickly as possible and on our own time. In that vein, we're seeing a host of companies rapidly grow to serve our need for convenience, from car sharing to home delivery of meals, streaming music, and movies. And you, Tyler, lead Zuora as its chief financial officer, a company with founders that envisioned the future of where we want to access people, places, and things as quickly as possible and on our own time. Zuora sees this opportunity and offers software for companies in any industry to successfully launch, manage, and transform into a subscription business. Jose and Tyler, welcome to the Ice House. And Tyler, congratulations on a successful IPO this week. It's great to have you both here.
Thank you very much. We're super excited.
Your experience up there on the podium next to your CEO, who are the folks up there and what do they all represent symbolically as this journey of Zuora going public?
We had both our executive staff who've helped build this company on this 10-year journey, as well as some of our original investors up there who saw it really early, saw Teen as a leader who had a vision for the subscription economy and could be the person to build it and execute.
You mentioned in one of the things that I saw of you earlier that you and a team sort of had a chance meeting, or you brought together and you realized that your partnership could click very fast.
Yeah, and that was 8 years ago. And it's amazing what has happened since. Back then, Teen was evangelizing the subscription economy. It was starting to see it in the SaaS companies. If you're a software company, you were starting with a SaaS model, but really pounding a podium on that this was going to happen everywhere. And in every single vertical, every single business that you could imagine, there was going to be this shift in business model away from thinking about products and away from thinking about the old channels to thinking about a customer and putting that customer at the center of your business model and thinking about how you have a relationship with that customer and then how you are able to earn that over time and then enjoy a monetization strategy based on that relationship.
And Jose, you've known your friend Tyler here for a long time.
I've known him for 17 years. Yeah, we were classmates at Stanford Business School and have been following him both professionally and personally for a long period of time. It's great to see him and the company, get to this point, but have a successful exit through a great IPO. So very excited for him.
Talk about both of you. Before we get into Zuora, you can go back to Stanford Business School. I mean, Tyler, you are a BC graduate, undergrad, Punahou before that, out in Hawaii. But what drew you both to Stanford Business School?
I can't speak for Jose, but it's about innovation, right? Stanford Business School is at the heart of innovation. It is in Silicon Valley. It's at the core of people thinking about what the future is going to bring and then building things to be able to allow companies and individuals go take advantage of those trends.
I think he's exactly right. The thing that I would add is Tyler is a perfect example of the Stanford network and ecosystem. One of the things that wasn't lost on me, having not come from a financial or business background, having come from the military, was that I would be surrounded by people, consultants, accountants, finance people, bankers that had been there and done that. And Tyler, for instance, was one of those individuals that, despite being classmates, was also just a very good friend. He helped me understand a balance sheet, for instance. He helped me understand an income statement. And so those kind of situations and those kind of people are what makes this school so great. And as you may know, they have a non-grade disclosure policy, which enables people to really foster and collaborate with one another versus compete against one another. And that was one of the reasons that really Stanford appealed to me.
You guys collaborated on a project about the price of diamonds related to the 4 Cs. A typical business school project for you?
I think, what Stanford allows you to do is to think outside the box, but also, put it into practice. And really, obviously, real work. You have really, really bright minds that you're surrounded by, a lot brighter than mine. You get to pick your projects, but actually do a real analysis. And that's where Jose and I got to first become friends. And that's just the friendship that has just blossomed.
So what did they actually task you to do in that project?
It was a regression study on what the 4 Cs, color, clarity, things like that, did to prices of diamonds. And so we had a tremendous amount of data that essentially we were able to extrapolate and run regressions on to determine what the R squared on those 4 different characteristics did to the price.
I know,
both being married, we really just wanted to see whether we got ripped off or not.
and in the process, did you get to meet a guy who you could use in future diamond acquisition?
Well, everybody has their guy, right?
Everyone has a guy.
And everybody can introduce everybody else to their guy.
Exactly.
Because you want to make sure that, you're all in the same boat together. You're not alone on an island in these kind of decisions.
But you're more educated in the 4C process than most of the people who need access to the guy.
Figured out the whole thing, for sure.
You're both West Coast natives. It seems like the tech community is extremely tight-knit. I mean, just this banter in itself is emblematic of that. Similar to maybe the banking community that we have here in New York City. What makes Silicon Valley so appealing to innovators? Jose, you were telling us last week you grew up there, but you're a Hawaii kid, Tyler.
I am.
What drew you to Northern California?
So my wife and I met at Boston College, and she grew up in the Bay Area. And so I'm not going to say that I followed her back out to the Bay Area, but I landed there because you go and you see all these companies that are starting, and you see all of the opportunity set. And my philosophy over the couple of decades that I've been out there is that if you're not taking advantage of this, and you're not thinking about the next, what is the big trends and what is big that's out there, then you're really doing yourself a disservice. When I sat down with Teen to talk about Zuora, he really, he painted out the same exact vision that we're executing against today. And if you asked me back then, hey, are you going to be with Zuora, for 8 years? I was like, I don't know, right? You really don't know how fast this is going to grow, whether it's really going to take hold. And the reality is, it's grown faster. We now have customers that are doing things that it literally boggles your mind based on technology, but based on monetization strategies. And I fast forward to what our kids are going to experience and the way that they're going to live their lives. It's a lot around what our customers are doing today on our platform. So it's really, really fun. And I think that's what Silicon Valley is all about.
Bring us into the real world of the subscription economy. I mean, I'm very familiar with it in a way that someone like I interact with it. Subscriptions to newspapers, subscriptions to Netflix, but you manage subscriptions to Caterpillar. Mm-hmm. How do you bridge that gap?
And that is a big gap to bridge, right? from a technology perspective, at the very outset, we talked about, and thought about building a product that could serve any vertical, could do a B2C scale, but also a B2B and enterprise grade class, do it in any geography. So we have customers in over 20 different countries, and over 20% of our revenue is already coming from outside of the United States. And then build something that companies could truly grow on. So when we look at our customer base, 50% of our revenue is already outside of tech. You think about subscriptions like SaaS, so of course, you're going to start, if you're starting a software company, it's going to be SaaS. If you think about digital media, we're not really buying papers anymore. We're listening to podcasts, and we're actually willing to pay for these experiences because we really value the content. But then when you look out a little bit outside the box, you think about products. And you think about, why is Caterpillar a customer? Why is Briggs & Stratton a customer? Why is Schneider Electric a customer and Komatsu customers? Because they see the future of their revenue streams based on a customer relationship. So they lit up all their devices. They did it years ago. So they're just thinking, what do we do with all this information now? What does it allow us to do? So it's technology enabled. What it allows us to do is actually change from thinking about selling the next huge tractor to maybe charging by, kind of metric tons of earth moved. And that really aligns the value for their customers with what they're doing and allows them to have a more sustainable business model as well. These companies are thinking about growing, right? They're all challenged on growth. And so we get tied to a growth initiative, and we come in and we allow them to do all the pricing and packaging and the iteration to actually execute on those subscription models.
You mentioned at a previous event that, when you are out pitching your wares, as they say, to a media company, for example, I think you went out to a road show with Rupert Murdoch at one point in the past. And, at that point, it may have been a couple of years ago, he's starting to see the challenges and threats to his business in media disruption. Now we're seeing more and more media companies, if they're not having a very sophisticated paywall and conditioning us to want their product like Jeff Bezos now with the Washington Post, the free services are declining in quality. Are you helping these businesses sort of put up a good moat around what they're doing so that they can focus on their customers and create a better quality experience?
I think that's absolutely right. We are helping these customers learn about their customers, and in those learnings, iterate on the monetization strategies. So digital media is a great example. We're not buying as many papers, but if you think about The Economist or the Guardian or the News Corp or the Seattle Times or the Boston Globes or Singapore Press Holdings, they're all customers of ours. And because they see the future of their revenue streams coming from digital content. But they don't think it's going to be an ad-based model. And we saw that what happened with Facebook today. It's about a trust with a customer. And eventually that customer is going to be willing to pay you if they can actually, have value on the content you're going to provide and that they can trust you. And then you earn that relationship over and over and over again. But these companies need to be able to iterate. They need to be able to move quickly. They need to have pricing and packaging changes. And they need a system that's going to allow them to do it. So that's what we do for our customers.
You mentioned these industrial companies like Caterpillar and Komatsu. Can you give us some examples of other subscription services for companies that we wouldn't expect to be subscriber-based now?
Oh, we have a ton of examples. We've got medical devices that, historically all the compute power has been in these big machines, and now with technology, they can throw that compute power up in the cloud and keep some of the machine down in a clinic. But what it allows them to do, instead of having to go sell $1 million device to these hospitals, they can go sell a $200,000 device because they've taken all the compute power out and sell like by the scan instead of selling the entire big machine. We've got examples of faucet companies who put sensors in their faucets so they actually understand whether it's a good shower experience, right, for hotels. And it's kind of Big Brother-ish, but when you think about it, and the hotels come back and say the best indicator of customer success is taking a shower. And so is the hot water working? Is the shower leaking, right? And they can get ahead of these things and actually go fix them based on the data that they have.
Jose, you've been watching your friend Tyler at Zuora for a long time, and we're going to get into actually the last maybe couple of years as the path toward the IPO got closer, but very special culture at that company.
It really is. They've been around for a long period of time. Obviously, the model has continued to evolve, and the success has just been impressive. I know it wasn't always the case, and there's trials and tribulations as there is with every company. But, one of the things that does stand out is also their culture. They have great pride in the fact that they have a number of ZEOs instead of one CEO. And I imagine Tyler would like to expand on that because it really is special. And it is, I think, to some extent, what has been, partly contributing to the company's success over time.
You see the ZEOs from the outside. What are ZEOs on the inside?
At the most fundamental level, a CEO to us is every single employee. But really think about a hierarchy where we have, my boss team at the top, and then take that hierarchy and just kind of, push it down, and you end up with this kind of spider web based on that hierarchy. And go to your name and pull it up, and imagine yourself as the CEO of your function. And what would you do every single day to come in and try to optimize performance and optimize to own what you're doing? And that's the culture we want to create with our individual employees, right? We want them to feel like they are empowered to go execute, and they can actually, have success in their own jobs, but at the same time, we're all operating together because everybody feels that way.
You must mentor and see a lot of startups in the Valley and people who are looking at a model that may one day get to the podium of the New York Stock Exchange and list their shares publicly. But at the very core level, when you're Hewlett and Packard in a garage, or the modern versions of Hewlett and Packard, what can they learn from what's happening inside the walls at Zuora?
Yeah, they can learn that, as Jose said, right, this has been a journey. And we don't have an end goal. We have a goal of building a very big, successful company. And if you stay focused on your business model and you stay true to the execution against that, and you see line of sight for what you want to do and stay completely focused on that mission, then you can be successful. And for us, we've gone to market and we meet with the investors for the last couple of weeks and we say, hey, we're a 25 to 30% grower, and we think we can do this for the next 10, 20 years. And it's ironic because a couple of years ago, I'd go to all these conferences and I'd have to pound the podium on the shift to subscription. That's coming. It's going to be in every vertical. And I'd see these faces. I'd raise some hands. Like, what are you guys talking about? We see it in SaaS. We don't see it in other places. And now in these meetings, their main question is, well, why aren't you guys growing faster? Because we see this happening everywhere. And the answer is, hey, we are going to grow as fast as the subscription economy grows. And we have a business model that allows us to sustain and actually, have that growth rate that we will grow faster if it grows faster, but we can also par down if it doesn't, and we won't burn capital as a result. And that's something that we put in place years ago, and we've just stayed true to it. And I think that's the best advice.
It really started 11 years ago with the founding. Mm-hmm. What inspired them at that very starting moment to start the company? What did they see now back in 2007?
You're absolutely right. The company's around for 10 years, but the vision for it is actually older than that. And the reason that it is older is because our founders coming out of WebEx and Salesforce, where Teen was employee less than 20 there, they had to solve this for themselves at those businesses. They were subscription businesses, and there was no Zuora around to solve that for them. So what they ended up doing is building their own internal systems. And the systems that they built are purpose-built, right? You build a system for today and your needs of today. And over time, though, your needs change. And they saw this at their own companies. They saw the pain that they were kind of having to take on by putting more engineers on trying to just maintain their own internal systems. And then those systems became an impediment for growth. And so Teen went out. He looked at other software companies. He's like, yeah, this is definitely going to happen in all the software companies. He's like, but gosh, look at this company, Zipcar, at the time. He's like, what are they doing? He's like, wow, people aren't really buying cars, but there's this subscription model. He's like, look at this company, Netflix, at the time. They're still shipping DVDs. But wow, they're talking about this evolution, and this is a subscription model. This is going to happen all over the place. And it's true. Now it's happened all over the place. And now those companies, though, they might have their internal systems, and that's okay because nobody wants to actually replace it. They do it because they have to. But now Salesforce now powers all of their acquisitions through us. And they do it because those companies that they're buying, like Demandware and Crux, they have different models and monetization strategies than the system that Teen built when he was there. And it would cost them way too much to continue to iterate on that internal system, and it wouldn't be efficient for them. And so they now move on to us.
How does your sales force make those sales to a sometimes skeptical buyer who is focused on, look, I got to move units out the door. I'm being judged by my bosses about how many units I'm selling monthly or annually, and instead you're trying to say, look at it as a subscription model. Your sales guys are in the room with the C-suite, bringing Zuora into those offices. What's the pitch?
So I think there's two things. One, what we've learned is that you actually can't get a customer to shift, right? They have to be ready to shift. And it's a really, really good way to waste a lot of capital trying to chase deals. And so what we figured out is that, we need to be out there and we evangelize, but we educate. And we go talk to so many customers, and we get companies to come to our events. We've got like 2 sales reps in Japan, and we get 500 companies to come to our event and pay to come to an event to learn about subscription businesses. We go to
You hold a lot of these events?
We do. We have our subscribed conference, which is the biggest one in San Francisco, and then we have
always San Francisco.
No, but we have kind of a sister conference in London. So they're kind of the two main, and then we do what we call these pop-ups, which could be an event with 500 people in Tokyo or New York or Sydney, because we have a global customer base. And at these events, people learn. But even then, you cannot make an evangelical sale. You could waste a ton of resources to do it. So what we do is we nurture, we get them to our events, we communicate with them. We have a bunch of young folks who are out engaging, but they're not just sending emails. They're actually engaging based on a catalyst. Companies launching a new service. They're going international, right? They're going downstream, and they were always enterprise. These are catalysts that we know drive complexity into your business model and things that would require you to think about a new system. And then when we are ready, when there's a true opportunity, it is a heavy sale because we have to sell to multiple functions. We are going to be your new system of record, but it's not necessarily a long sale because we've actually kept the nurturing going on. I'll give you an example. So Caterpillar's a customer of ours, and we talk about these IoT customers, but we get, both...
What's IoT?
Internet of Things. It's connected devices.
Yeah.
And we get, Briggs & Stratton and both Bobcat to come to one of our events. It was like, well, we don't know what they're thinking internally, and we can talk to them about it, but we don't know what they're going to do. And lo and behold, Bobcat, they're iterating internally. They think about the business models, and they have connected device, but they're not sure. Briggs & Stratton, on the other hand, they say, hey, we have a business model that we now going to execute. We got all these lit up lawnmowers, and we want to be able to go sell a service to these, kind of commercial landscape companies so that they can actually do workflow management. So they bring us on board to help them go execute against that.
Fascinating. And when's the next one of these conferences? And can anyone show up? How do you...
Absolutely. Subscribed. You come to Zuora.com. Our subscribed conference is in June in San Francisco.
We'll take a break at this point. Back when we return with Tyler Sloat to get an idea of why and how Zuora made its way to the New York Stock Exchange.
Crude oil is one of the most widely used and actively traded commodities in the world. ICE Brent Futures was developed as a waterborne contract in 1988 to protect against price movements of crude oil produced in the growing Norwegian and UK North Sea. The contract quickly grew to become the global price benchmark for crude oil. Today, the Brent complex includes a family of more than 400 related Brent-based hedging instruments, including the benchmark for diesel fuel, ICE gas oil. Visit theice.com/global-cruise for more information.
Back now with Tyler Sloat, Chief Financial Officer of Zuora, which last week went public on the New York Stock Exchange. Also, friend of the pod, Jose Cobos, our head of technology listings out on the West Coast. Tyler, today a big day for you. Was an IPO always in the cards for the company?
I think building a really big company, has always been in the cards, and we still are on that journey, and we're going to continue to execute. An IPO is just something that happens along the process. We break the company into these phases, and we're kind of in this phase of 100 to 300. So what's the difference between entering at 100 and exiting at 300 for this phase? And one of those things was going public. But the other thing that's happening is that we are now selling to some of the biggest companies around the world. And they're looking at us to be their mission critical system of record going forward. But as a private company, it's really, I'd say it's a little scary for them because they don't know if we're going to be financially viable. We don't know if we're going to be around. So I would personally have to get on the phone with CFOs and meet with them to ensure them that we're going to be okay. Now that we're public and we're public on a New York Stock Exchange, they can look at us and say, hey, this is a real company and it's sustainable and they have a business model that's going to be there for the long term, and it is just a stamp of validation for us. So that is a big motivating factor.
You planning on managing the CFO's office like most public companies, quarterly calls with analysts? What's the tempo to come?
Yeah, no, I think we will absolutely do that. In fact, we've been putting this infrastructure in for the last couple of years. We raised our last round of financing 3 years ago, and we brought on Wellington as the lead, and they are a big public company investor. So we've kind of been building up this experience set internally.
Tyler, just curious, obviously you just went through this process. Any lessons learned, anything that you would educate a potential CFO that was in your shoes thinking about going public, what you may have done differently or what you wish we would have done maybe better?
No, I think we've been preparing this for a long time. I think as you go, it's exhausting, right? You go through this roadshow process and you meet with a lot of investors. And what I think is, in particular for Zuora, what we found is that if investors got to talk to us and actually learn our story, they really understood it a lot more because it's not necessarily clear, just on the outside. But the advice is to stay true to what you do and stay true to that message and don't try to make it anything else other than what it is, right? I'll give you an example. We get asked all the time, and I already mentioned this, why aren't you growing faster? We're a 25 to 30% grower. right? And that might be different some of these high-growing SaaS companies that are coming out right now. And most of those are companies that are customers of ours. It's like, we are going to do that because we think it's very, very sustainable, but we also say that's the growth of the subscription economy. And we are going to go in line with that growth.
What were the number of cities you visited, just you and Teen, or did you bring a larger gaggle with you?
Teen and I and our VP of Investor Relations.
So a small little core group.
It's a core group.
Where did you go?
Of course, we had some bankers with us and things like that. Well, we started on the East Coast. We did New York and Boston. Then we hit Mid-Atlantic, Baltimore, Philadelphia. Then we went to San Francisco, and then Kansas City and Milwaukee, and Chicago. And yeah,
how long?
I think I'm back in New York now, right?
Yeah, you are in New York City. I can vouch for that. How long did that? What was the span of time for that?
It was pretty quick. Oh, I missed the fact that we went to London the week before that to talk to some investors, not technically on the roadshow, but more of what we call testing the water meetings. It was almost 2 weeks.
There's the old debate, Tyler, of whether companies should stay private longer and stay clear of the duties and obligations you'll have as a public company. What were the signs that this was time for Zuora? What was that moment that said we need to file the S1 and initiate the process?
I already mentioned a few of them. I think it's not about staying public or private longer. It's about, do you now have a business model that you're confident in? Do you have the scale that's not going to have variability in that model? So it's actually be quite predictable so that you can operate quarter in, quarter out as a public company. We would love to be one of these very, very boring investments for our investors, right? Just invest in Zuora and then put it in a drawer and wake up 10 years later and we built a great business. And that's our goal.
Curious, you obviously just raised a lot of capital. What are you planning on doing with it, and where do you think resources will be continued to invest it in?
Yeah, we think about our business in a couple of different ways. We think about the costs that we incur and invest in to kind of sustain the business, which is and support our existing install base, which is something we call recurring expense, which is COGS, G&A, and R&D. And then we think about growth, and we think about the dollars that we deploy into our growth engine, which is sales and marketing for us. And then on both sides of that coin, we look at, it's like, what are we going to get back for these investments? And we're continuing to grow, we're continuing to innovate, but we clearly want to grow our subscription revenue faster than we make investments in some of these areas. But we are still burning some capital today, and there will be an inflection point on that cash flow positive. But right now, this gives us a capability to continue to make those investments as we see fit.
Obviously, a moment of celebration when you IPO. What do you think might change about the culture of Zuora now that you've got liquidity, the people who've been committed to it for so long have the opportunity to reap some of the reward for all of their time invested in it? You were mentioning maybe that one of your board members said, well, celebrate for a day or two, but then Monday back to work.
Absolutely, back to work. The culture isn't. We talk about this culture of a CEO, but it's not. We're not a small company. We are already almost 1,000 employees.
But that's just adding 400 people in the last year, right?
That is. But we're also geographically dispersed. So we have employees all over the globe. And this has forced us to kind of act bigger than we are already and put in a level of maturity. Now, I think as a public company, there is a new level of operational cadence and maturity that you have to adhere to. And we've been, practicing this internally for quite some time now. And I think that'll obviously continue. The challenge, I think, is growth, right? How do you grow as a company but keep your culture? And we're very focused on that.
Tyler, it wasn't lost on me that your mom called right before the show started. Yeah. Your wife is here. Tian's wife and kids are here. Maybe talk a little bit about sort of the ecosystem of people that you have sort of powering you, that got you here, and how important it's been for them to experience the IPO as well.
Yeah, your support network is so important, right? And you look at work, and sometimes there's very little distinction between work and just life in general. We spend more time at work and thinking about work and bringing work home than anything else. So you need to have a family structure around you that is fully involved and fully dedicated to you. And thankfully, I have that, which I'm very, very blessed about. And we encourage that, right, across the entire company.
You come from an interesting background, as we were talking about maybe at the beginning of the show or off air, from Hawaii, Punahou High School, some of the great alumni that came from that institution. Some of those people were good role models for you growing up, and as you assumed the mantle of a public company's CFO, who are the professional mentors or role models that you look to?
I can look to a bunch of just CFO mentors, folks that I've worked for in the past. We've brought one of them onto our board, and Ken Goldman, who I worked for at Siebel Systems. And then you look all across different roles and different CEOs and people like that. We look at Salesforce and we look at the company that they've built, and we think it's fantastic. And clearly, Teen has a lot of allegiance there. But the beauty of being in Silicon Valley and the networks that you can create, it's the people that you look up to, but it's also the people that you get to engage with. And I also had the opportunity over the last 2 weeks to just be texting back and forth with just a ton of CFOs, both private and public, asking advice and just bouncing things off of them. And it's an incredibly helpful network.
And we shouldn't neglect to mention the relationship between you and the New York Stock Exchange as embodied in your relationship with Jose. As you look back over the last 6-8 months getting ready for this day, what has that relationship meant and the services and capabilities that the stock exchange offered as you continued on this road toward the IPO?
When Jose told me that he had joined up here at the New York Stock Exchange, and we've clearly been friends for such a long time, and I can't point to a more kind of trustworthy, but just what I would quote unquote call a real individual. It was really a no-brainer. We already look at the New York Stock Exchange as the platform for just the sustainable, just true businesses that think about what the future growth is going to be, because now tech is such a huge platform for NYSE, but also these legacy companies that literally have been listed here forever that are now our customers, and we now get to engage with them and be partners with them on the same platform. It's really, really cool for us.
I know you have been working really hard, and it's time to celebrate a little bit. Maybe you could give us an understanding of what your plans are next 24 hours, next 48, because from what I understand, the schedule is still busy, though it's a little different than what it has been the last 2 weeks.
I do hope there's some sleep involved somewhere. No, we are so excited. We had the opportunity to bring about 40 ZEOs from around the globe here. A lot of these employees have been with us for a very long time. I think we're going to celebrate a little bit tonight in New York, and then there was literally parties going around the globe today on listing, and we have an internal channel that we get to watch all of this, and we'll go home and we will celebrate again tomorrow with a big celebration in the Bay Area.
Jose, with Zuora, another great tech company going public on the NYSE, certainly a reaffirmation, along with Spotify a few weeks ago, that the NYSE is the home of tech.
No doubt. As we said last week, last year we did 59% of all tech IPOs. That equaled 86% of all tech IPO proceeds. This year we're off to a great start. You mentioned Spotify, psyched about Zuora. We got a number of others that are already publicly filed, in which we expect to hit the market in the very near term.
What's on the horizon?
Vireo, which is a spin out of AT&T. We got Pivotal, Ceridian, and Smartsheet, and then a number of others that haven't publicly filed yet, but that we would expect to come in the very near term.
Keeping you pretty busy.
No doubt, but liking it.
Getting ready for Subscribed in June in San Francisco. What should investors or people who are potential customers of Zuora look to toward the second half of the year in terms of things that you'll be rolling out, announcements you'll make, and then what the future holds for the company?
Yeah, when we were getting questions about product announcements, things like we say, hey, we encourage you to come to our conference. And the conference is not as much about Zuora, it's about talking to all these other companies that are doing really cool things and then engaging them. What we want is to create a community where customers can learn from each other, and they can learn how to launch new products. They can learn about, pricing and packaging and how to think about iterating on that and the sensitivities of that. Or they can learn about how customer records and about data that you produce around your customer, and then, how do you actually learn from what your customer wants? That is what our conference is all about. And, we get a couple thousand people there every year, and I think it's now we get, obviously the magnifying glass on it with being a public company, but I think it's continued to grow just the way it has grown, which has been fantastic.
Well, Jose Cobos, old friend of the pod. Tyler Sloat, new friend of the pod, Chief Financial Officer of Zuora, our newest listed company here at the New York Stock Exchange. Once again, congratulations. Thanks for joining us in the Ice House.
Thank you so much. We are the happiest new member of the New York Stock Exchange.
Huge congrats, Tyler.
Thanks, Jose.
Can't end any better than that. That's our conversation for this week. If you like what you heard, please rate us on iTunes so other folks know where to find us. If you've got a comment or question you'd like one of our experts to tackle on a future show, email us at icehouse@theice.com or tweet at us at NYSE. Our show is produced by Pete Ash with production assistance from Ken Abel and Steve Portner. I'm Josh King, your host, signing off from the library of the New York Stock Exchange. Thanks for listening. Talk to you next week.
Information contained in this podcast was obtained in part from publicly available sources and not independently verified. Neither ICE nor its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of this information, and do not sponsor, approve, or endorse any of the content herein, all of which is presented solely for informational and educational purposes. Nothing herein constitutes an offer to sell or a solicitation of an offer to buy any security or recommendation of any security or trading practice.